Hello and welcome to this weekend's premium newsletter for May 13th. So nothing like a $75 billion drop over the course of 36 hours to remind us that we're still in a larger downtrend. This week certainly signaled a reverse in polarity after we've had nearly a month of bullish movement. We started off with fear in the market after an interview last weekend with Bill Gates, Warren Buffett, and Charlie Munger, who were all very outspoken in their doubt of Bitcoin and blockchain. 3 billionaires together in a room can certainly move a lot of money with their words alone, and they are very quick to make their opinions of Bitcoin and cryptocurrency known. As we covered, both Warren and Charlie are heavily invested against the interest of the blockchain movement, being invested in legacy banking systems, and Bill is not the technology genius he's often portrayed as. All three have a vested financial interest in seeing blockchain fail, which is ironically bringing more attention to the space the more they talk about it. As for what really moved prices this week, clearly we saw the news cycle dominated by South Korea. South Korea has become a leader in the blockchain community. As the nation leads the blockchain revolution, neighboring countries are looking into how the blockchain technology can be best utilized to further security and efficiency. A move is being made to officially legalize ICOs in an effort to champion blockchain development and research in the country. Right now, a bill is being pushed forth that will allow just that. But as fast as crypto is becoming mainstream on the Korean peninsula, it's also perceived as being in a state of fragility. The latest set of news that influenced the decline for most cryptocurrencies was a reported investigation of South Korean exchange Upbit by the country's Financial Supervisory Commission. However, it was later revealed that the irregularity being investigated was in regards to liquidity issues. Essentially, the issue involves sharing or pooling liquidity with other exchanges. It seems that the regulators did not understand the shared liquidity, hence the reported investigation. This is very similar to the other times we've seen reported Korean news crash the market, which then ended up being less severe than originally reported. Hopefully in time this market matures to be less susceptible to reported news, but it may be some time until that's the case. Thankfully this week we also made strides towards a more mature market. Intercontinental Exchange, the parent company of the New York Stock Exchange, is looking to establish its own cryptocurrency exchange. ICE has been in talks with banks and financial institutions to facilitate swap contracts for Bitcoin trading, allowing them to buy contracts for Bitcoin. Once an exchange user buys one of these contracts, cash changes hands and the corresponding Bitcoin would appear in the wallet the next day. The exchange would permit direct Bitcoin trading, not futures contracts we've seen so far. Last, we recently learned from the biggest management reshuffle in Facebook's history the social network's intentions to develop blockchain technology. The former head of Facebook Messenger announced this week that he will lead an exploratory blockchain group. As we previously predicted, Facebook will want to implement a blockchain solution to track user payments on and off their platform. This would allow users to pay for services on the platform, such as games, and pay other users. Importantly, this would all be done in real time and not have to go through banks, leading to increased transaction costs. While this week was less than ideal, once again we don't see anything fundamentally has changed. Blockchain is still here and primed to change the world. People are still working to make that happen, and simply because the market has gone down does not mean the technology is any less viable. So with that, I'll turn it over to Doc. Have a great rest of your weekend, and we'll talk to you this week.
Hey guys, it's Doc for ReadySetCrypto. After a couple of days, Thursday and Friday were very rough on the crypto market. As I said in the report today, we dropped about 11% on Bitcoin alone, which in the Bitcoin market is no big deal. But if we're talking about just about every other asset class out there, an 11% drop in any market and over the course of 2 days would normally elicit panic. Although, tell you what, looking at Twitter over the weekend, I did see a lot of references to people having their accounts wrecked, and that's not a good thing. We need to have a little bit of perspective here about what's going on the larger time frame basis, and I think this might be helpful to you if you keep this in mind. Now, first of all, if we look over here at Bitcoin on a weekly chart, and this is what I've been talking about the last 2 weeks, what is the trend here? What is the trend overall? It is still to the downside. So in the context of a bear market, we will still see, right? We're going to still see these big rallies, and then it's going to roll over, and big rallies, and then it's going to roll over, and big rallies. Is this going to roll over again? I don't know. That would be the assumption, though, that in the midst of a bear market, you just keep rallying up like crazy and then rolling over, rallying up like crazy until finally everybody just gives up and says, I can't do this anymore, which normally marks the bottom. Now, when I was bringing up this stuff at the beginning of February, people were telling me, oh man, you're nuts. You're just too pessimistic. What is your problem? But I've been through these before and they are not fun. And this is why people get destroyed during bear markets, is because they're not used to this lack of linearity. Look at the difference between what happens in a typical bull market. We have this very predictable kind of stair-stepping movement. Everything makes sense. The pullbacks revert back to the mean, and everything just sort of quietly glides to the upside. And then you lose all of that when you get into a corrected market. All of a sudden, nothing makes sense anymore. Every time the market rallies, every time you get bullish after a big rally off the bottom, the trap door opens up. The rug gets pulled out from underneath you, and all of a sudden you feel betrayed once more by the market. And this, again, it's like the expression you've heard, the beatings shall continue until morale improves, and this is probably the best way to describe what happens during a bear market. Go back and look at what happened to the bear back in 2013, 14, 15, that whole era of this. We saw several of these rallies that would come up that would turn out to be false hope, and then once again the trapdoor would open up to the downside. This is what needs to happen. All of this ebullience needs to be flushed out before this market can trend once again. So no matter what asset we looked at on the weekly chart, we're generally going to see pretty much the same thing, is that we're going to be, even though we have strong rallies within here, overall it's still a downtrend. We still have a lower high setting up, like on Ethereum, for example. Ethereum would need to trade above about 975, 980 to break that former high and show intent to an uptrend. Now, here is the saving grace for you, for those of you that are saying, well, I was never going to get up there again. What has to happen is a higher low has to be put in. And the higher low is going to be the key towards what happens here. Because if, and I'm looking at Ethereum right now, but it pretty much could be just about anything in the top 10, top 20, top 100 coins. It doesn't really matter right now. We need to see this roll over. We need to see the negativity stoke up once more. We need to see people finally saying, look, I bought in back over here, and I just, I went through this one, and I closed my eyes, stuck my head in the sand like an ostrich, and watched the rally, and now I can't take it any longer. I can't do this again. And this is literally what people will say, is I can't do this again. I quit. So a higher low needs to be put in, and this is going to be the capitulation point at some point here. Now, I don't know if this is the one that'll do it, or whether we have to do something like this, go through another phase and another round of this again. But one of these times, a higher low will set up. And what will happen is something fundamentally will change. And from this, well, kind of like a phoenix from the ashes, we will see a lot of these bears trapped. And we will see the bulls desperate to jump on board. And so once that happens, once that major higher low sets up, and this is where the phase change is going to happen. This is where we're going to change from being in a bear market to all of a sudden we're going to see this thing explode up from here. It has happened every time. It will happen again. It's just a matter of patience to find out where and when that point is going to be. Now, there's still a number of coins that are moving on any particular day. If we go down here to the screener, we can see that we've had, let's see if I can hack up this name, Gracel coin, perhaps. Is that how to pronounce it? That one's certainly been a mover lately. We can see if we just sort of select over here, we can see that this has popped up to the upside. We have Steamer, we have MCO is moving, Monaco. So a lot of these are moving along nicely, but I prefer not to go after these. Because, just these one little pops, if you don't catch it at that particular day, then it doesn't go anywhere. And so this is what you'll see, is that typically during the corrective periods, you'll see particular coins that'll pop up for a day or two on some kind of rumor, but then they don't go anywhere because they're going counter trend. And so you'll see those moves sold into, and people buy the pump and dump and get, left holding the bag again. Now, there are certain coins that I really do like the look of this one, like Ontology. What I would like to see for Ontology before I jump back into this one again, the last swing that we took was from the pattern here on the break of the flag. So what I'd like to see here at this point is I'd like to see just a little bit more consolidation. If I look out here at the weekly chart, let's see how much energy we have at the weekly chart. Guess what? Hasn't been alive long enough to even pull out 14 bars of this. So this is very, very new. And so what I'd like to see on ontology is, again, I'd like to see this sort of a bear trap. I'd like to see this roll over and then set up, once again, more of a flag. I'd like to see this roll over and spend just a little bit more time. So I'd like to see a little bit more of an energy peak up here. So if it rolls over and if it generates closer to a 60 signal and prints a higher low here and then breaks out above there. So sometimes what you have to do is you almost have to set up a thesis for how you would get involved in this. Never, ever, ever chase after a move like this. Never, ever chase after a move. But if it sets up this higher low and then breaks above here, then you're going to trap a tremendous amount of bears, or just enough bears, depending on the liquidity, plus some new bulls jumping on board this, and you'll get your pop to the upside. So this one seems to be doing really well, and it's going counter trend to the rest of the market right now. So I would say we'd know probably by the end of this week. By the end of this week, we'll know whether or not something more serious is afoot, or whether we're going to get perhaps that bounce. No matter what I look at across the board, the same thing is setting up. So what we've seen Saturday and Sunday here is a little bit more of a bounce, but this may only set up as a lower high. Lower highs are the most damaging signal in technical analysis, because what happens is too many weekend bulls jump on board here, and there's just not enough to sustain the move. The shorts overcome this, and then what happens is all the weak hands here that went long at this point on what was supposedly a dip in price, all of a sudden they're flying out of the position, they're punching out, they're ejecting at market prices, which are pushing down the price very quickly. So watch out for the lower high. The lower high is always the most damaging signal that's out there, just from a price perspective, because of the fact that there's so many emotions associated with that. All right, folks, that is it for today's report. Thanks for listening. We will see you on Monday.